I'm Howard Gold, editor-at-large for MoneyShow.com and a columnist for MarketWatch, and I'm speaking with Laszlo Birini. Hi, Laszlo. How are you?
I'm good, sir.
Well, Laszlo, a lot of investors follow what's called the Shiller PE, the CAPE, adjusted for inflation over 10 years, PEs over 10 years. And right now, if I'm not mistaken, it's around 23 to 24 times, which looks a little high. You have done a lot of work on this. How do you see this?
The first question I ask is why? For years we looked at trailing multiples in the market, and for years that worked. And all of a sudden in this market, we've come up with this fascination with looking at a different viewpoint. I think part of it is because a lot of people are so negative. A lot of people from the beginning have been reluctant, and this happens to create a negative message as opposed to the traditional approach. And with all due respect to Dr. Shiller, if you go back to 1990, for example, that market started at 17 or 18 times. Now, no one was concerned about it then.
Right.
And this time around...
17 or 18 times on the CAPE or 17 or 18 times on the Shiller? Okay.
Right. And this market, Shiller, quoted in Forbes magazine, said he wouldn't buy until it got to 10.
Well, he also did say, actually earlier this year, I saw him on the television, he also did say that even though it was at that level, he said it's not humongous, and he was actually buying stocks as opposed to tips, which have been a big favorite of his, which struck me as very surprising.
Well, sometimes you change course, or maybe you admit it, but I look at it, and historically I don't think it's been quite the issue that it should be. I think part of it, unfortunately, is because Dr. Shiller has been credited with calling the dot-com bubble.
And the real estate bust, too.
But in reality, he was bearish in 1996 and told Mr. Greenspan and friends that the market was grossly overvalued. And he wrote a couple of papers, including one in 1997.
Right.
In 1997, he said the market 10 years from now will be down 45%.
Okay.
And so, to me, the whole issue fails on an intellectual and historical basis.
So let's get back to PEs. You use trailing PEs. Where do we stand in trailing PEs right now, and how does that stack up to previous markets?
Well, it's above the norm.
What is it, about 18 or 19?
17, 18. But the one thing no one has mentioned in this market is what's called animal spirits.
Animal spirits.
And actually,
that's the Keynes phrase.
And actually, Dr. Shiller wrote a good article about that, a good book about that. And I think is a very critical issue. We get to a point, as Yogi Berra once said, if people don't want to come to the ballpark, you can't stop them. And so I still have a view that at some point we're not going to talk about PEs, we're going to talk about potentials.
Right. So right now, a lot of people say, well, the PEs are getting a little higher, but they're really not dramatically high. We're not talking about like a 1999 PE or something like that. We're talking about sort of in the upper middle range, right?
Upper middle range, and the potential with a better economy. This economy is still, one article says it's mixed, and yet Time has a 4-page story about how we're underestimating the economy. Right. So I think the jury is still deliberating with regard to the economy. And if you give it the benefit of the doubt, it would probably still be moderate. But again, I don't buy the argument that the Shiller at 23 times is a real cause for concern, because the last time it was 23 times going up was in 1995, and over the next 5 years then, it went up 127%.
Thank you very much.
My pleasure.
We've been speaking with Laszlo Birini on the MoneyShow.com video network.